Welcome back to the Till. Hi, my name is Kevin Retcher. And in this video, I'm going to give you a market update and I'm going to walk you through what to do in this environment if you're a first-time home buyer and you're looking to buy a house. All right, so let's get into it. The Wall Street Journal put out a very nice article today, how to choose a first-time home buyer loan, right? And in general, the most common first-time home buyer loans out there are your conventional, your FHA, USDA, and VA loans, all having different merits depending on credit score, eligibility, and location. So USDAs are generally in more rural areas. I personally don't do them in the metropolitan area that I'm in. My most common is VA, conventional, then FHA in my immediate areas. VA, of course, is no money down. You have to be a veteran. Conventional, 3%, 5%, 10% down. That's your better opportunity versus FHA if in fact your credit scores are higher. If your credit scores are lower, then FHA swaps and takes the lead over conventional. It's all based on that mortgage insurance cost and the insurance based upon credit score and loan to value. Wall Street Journal has a very good article. I'm just going to quickly scroll through here just in case you don't have access to it, and you can just quickly look at it yourself in slow-mo. But the most important part here, and I firmly agree with this writer, and she says, if you have good credit but don't qualify for either VA or USDA loans, conventional loans usually cost less than FHA loans over the entire term. But if your credit score prevents you from qualifying for conventional, and FHA can help you buy a home sooner. So one of my great mentors, Ted Ralph, said, Kevin, there's a loan for everybody, don't judge, right? So if someone wants to get into a house and there's a mortgage, I often will try to say, well, maybe you should wait to get to this, or maybe you should wait to get to that. But in the end, the consumer has to make that decision for themselves, right? So currently, 10-year Treasury spiked a little bit after Kevin Warsh decided to leave interest rates the same. But he applauded the simple fact that interest rates have moved up about 0.25%. So if you look over the last 1 month, in general, you can kind of see that trend, right? So he didn't have to do that heavy lifting and be the bad guy and raise interest rates. I'm expecting that same thing to continue into the September timeframe, the September meeting. I think that there's going to be a 0.25% gradual increase that Wall Street is going to price in. And then that's going to give him the runway to go ahead and actually make that first quarter point move, which is a 63% chance right now of a rate hike in September. Here's the thing. If you checked and been paying attention to the Till, Truth in Lending and Life, I had said interest rates are cyclical about on a 2-year basis. And about 2 months ago, I had indicated that I thought we were 18 to 20 months into a downward trend. And then the Iran situation happened and rates have popped up, right? Where I feel we're at right now is a reflection point. Rates could go up for the next 2 years if that's how long it would take to get that runway for Kevin Warsh to get the inflation down. Or by giving less guidance, we've already bumped up a little bit. We're going to bump up a little bit more. If he raises rates once, I think he's going to raise rates a second time, And by that time that we get to that second one, I feel in a 6-month time frame, we should start to see some impacts being made on the inflation part. And if that's the case, the next move then could be down, right? But rates usually go like 2-year basis, one direction or the other, but they can have a plateau before they make their next decision. I think the rates are going to just tick up a little bit, not a lot, but then they're going to have to decide whether or not they're going to need to go a lot higher or if we can reverse the trend and go down. So what I thought was really kind of interesting today also was primary mortgage rates at Freddie said 6.66%. Don't like that number. I'm going to add a 7 to the end of that one. But I actually downloaded the rates in the history since 1971. And I'm a math guy. I figured, why not check it out, right? So here, down here, I just highlighted the interest rates, and this is every week's interest rate printed by Freddie Mac. And normally my rates are a little bit lower. Freddie Mac, I think, has a point origination in their numbers, right? So if you look here, the average going all the way back to 71, weekly average would be 7.68%. So interest rates have been between 6 and 8 majority of history, right? So while we don't like that number, I think that is in a range of consistency over the last almost just over 50 years. I thought that was pretty interesting. Now, what do you do if, in fact, you're in the mortgage market and you're trying to purchase a home, right? So in this chapter of the Till, I'm going to talk about customizing your mortgage. Right? So one of my main lenders, United Wholesale Mortgage, allows me to customize a mortgage for what you need, for what time frame you need, and not a dollar more. Not another day more, not another dollar more than what is needed on your purchase or on your refinance. So kind of let's go into it. I'm going to show you on a $500,000 loan, 10% down, some of the flexibility that I have as a mortgage broker. First and foremost, Vantage score. Do you know what that is? A lot of people don't. There's a new sheriff in town, and it's called a Vantage score versus a FICO score, right? So we've been using FICO score for a long time. Vantage just got approved by Freddie, Fannie, FHA, FHFA has approved them for all the government entities, but I only have one of my lenders that's actually using it and has been able to implement it so fast, right? So on this Vantage score, it looks at shorter term credit versus longer term on the FICO. I'm seeing in some instances they're really close. In some instances, one could be 40 or 60 points higher, and that can make a major difference whether or not you're able to do FHA or go conventional because your score's higher on one versus the other. The other thing about it is having choice. What it really allows me to do is to potentially save on mortgage insurance for clients, and that's where the huge benefit of having both the Vantage and FICO capabilities. The next thing I can customize is the number of lock days. I'm not stuck to 8, 11, 15, 22, 30. Most lenders have 15, 30, 45. This lender has some presets at 11, 15, 22, but I can do a 12-day. I can do a 14-day. My average clear to close last year was only 12 days. Here, I'm punching in, this is probably about a 20-day lock, okay? The next thing I can customize is whether or not you want to buy down or not. That's not as big of a deal. But in general, I have the ability for lender paid buy downs, and it can be priced into the loan if we want to do that. The next is escrow impounds. A lot of people don't know you can actually waive escrows on VA loans with this lender. Most lenders will charge a quarter point, probably about 50-50, and then 50% will let you waive escrows if you choose, right? This lender allows you to waive just insurance or just taxes, so you have all the flexibility there. Also have the ability for flex term. I can do 28, 29, 27, 22-year loans with this lender. And so that's great when you've doing a refi and you've paid a couple years and the wife doesn't want to refi because you go backwards. You really don't go backwards if it's no cost refi, just FYI. But if you want to set up so that you pay it off at the same time, I'm all for it, right? The next thing, you can waive underwriting fees or not. But one of the nice things that I can do is target a price that's exactly the interest rate for the exact number of days and customize and give you a little bit more home affordability when it comes to your interest rate. Here you can see a 0-point loan is 6.574 versus being stuck at 6.625. And in this situation, we had 0.15 on the mortgage insurance. So they have cheaper mortgage insurance than almost every other lender because of their volume and size. There's other things I can customize. I can also customize if you want an exact rate. So let's say you wanted to be, the seller was going to pay you an extra $2,000. So I can price out $2,000 on this loan that the seller is going to pay on your behalf, and we can see what that will do as far as lowering your interest rate. So we were at 6.574 before, and now with a cost of $2,000, we'd be at 6.561. Let's just say for fun, you had home inspection and now you're getting $8,000. Let's say you want to just see arbitrarily what $8,000 would get you, right? So with this lender, I can narrow it down to the dollar. This cost at $8,001 would be 6.303%. So when it comes to the ability to have the flexibility to maneuver, use up additional funds, there are a lot of times, had a recent deal, client was getting $19,000 seller credit after the home inspection. Closing costs were only $14,000. So we had to get creative on how we're going to use the other $5,000. We analyzed what was the best road. We could either lower price or we could lower the interest rates. And we had that flexibility of getting to the dollar, getting to the penny with this customization. So when it comes to your choice of lenders, you sometimes don't know the little things that can make a difference. And sometimes people don't know. Sometimes I'm saving someone $20 extra on their payment, and it just worked its way through by the customization, and they don't know that they're saving that $20 every single month for 30 years. So it's huge. Customization is a thing on your mortgage, especially when it comes to home affordability. We need all the benefits that we can get right now. And in general, if you ever just want to see where interest rates are, on my website, there is a live rating engine. If you click on the live rate quotes, you absolutely can plug in your information and get some customized quotes. The other thing that I would tell you that this lender does is if you want a home market analysis, this tool is a property report, and I'm happy to share that with you. I can do this for anyone across the country and get you a property report and send that out to you. It's through House Canary. They're actually working out a big deal with Google, if you're paying attention to the news. But that report looks like this, right? And it's a, oh, sorry. Looks like this. It's a pretty extensive report. So if you have any questions, if you need a home value estimator, just because you want one for your house, I'm happy to provide. If you as a listing agent want to do that in your listing presentations as another tool, let me know. My name is Kevin Retcher. This is The Till. See you in the next video.